Hello everyone. We'll get started in a minute. All right. So here we are today with a bit of a delay, a couple of minutes, just readjusting to the new schedule. Let me just... There we go. So hello everybody. Thank you for joining me today here. So we'll try to make this a bit quicker than usual. So I'll do my best to actually stick within my kind of new half an hour time limit. And yes, I've been quite busy with a lot of planning for the fall semester. As I think a lot of you probably have with, people going back to work, having your kids restarting school, or if you yourself are a student, looking forward to the new semester. Frosh was taking place last week or a couple of weeks ago, depending on which university you're at. But yeah, all good things. So today we will be talking about the July housing boom, as you might have seen it in the media. So is it really a boom, quote unquote boom, or is it more of kind of wishful thinking on the part of people that are kind of overly exuberant and overly optimistic in terms of where house prices are going to go? Well, let's really look at the hard data and what do they tell us. Well, this basically is a bit of a composite made up, looking specifically at data from the Toronto Real Estate Board, so TREB here, so CERB stands for the Toronto Real Estate Board. So that's the multiple listing service sales data for July, and you can see this is final. It's a kind of a more of a guesstimate. So basically, this is not from me. This is from a number of realtors, and this, I managed to find this probably early August, so about a week or so before the official numbers were announced. And the official numbers for Toronto specifically are quite in line with this. So I'll just show you this data initially, just because the nice thing about it, again, keep in mind this is Toronto specific, it's not for the whole of Canada, but it sort of illustrates some interesting trends that we don't have to look at every single one of the different cities individually. I'll show you where you can find that information. I mean, as a matter of fact, the main two links to the CREA, so the Canadian Real Estate Association. You already have that in the description down below, and then we'll also talk about the stats released from Teranet, BNC Bank, the National Bank, that was just released this morning, also for July. And you'll see there's a bit of a discrepancy in terms of the actual numbers, but they're more or less in line, depending on what you look at, right? I mean, Mark Twain was quoting various authors as saying, I mean, he's quoted as being the one that originated, there's lies, damn lies, and statistics. So depending on which stats you're focusing on, you can paint a picture as being overtly rosy or very negative. So I'll kind of try to show you both sides of the equation. And if you're looking at supply versus demand, if you're looking at number of sales, if you're looking at prices, and try to make sense of it when you still have millions of people that are unemployed and that are very uncertain when they're going to be able to come back to work. And why do we care about unemployment? Well, simple. If people don't have any money, well, how are they going to be paying for all those houses that they're just bought, right? Anyway, so how to interpret this relatively complex graph that you see right in front of you here? Well, let's at the very beginning, let's focus at the bottom here at the legend, basically. So in this kind of purple, pink, like fuchsia really color here, you have the 5-year average for each one of the months. So you have January, February, etc., right? So you have the 5-year average running there, and here you have in green you have the 10-year average. All right. Now obviously you have each one of the previous 5 years individually. So 2016 is in yellow, 2017 in this sort of red, like the thin red one over here, in black. So basically this line over here, that's 2018, and then 2019 is in blue as it's highlighted over here, and then obviously 2020 is the dark kind of burgundy line that you see over there. So this is a normal cyclical market for most Canadian cities, with a few exceptions if you're going very far north, for instance. But the vast majority of medium-sized and large Canadian cities tend to have this kind of cyclical they tend to have this cyclical pattern where you have basically the biggest market, the kind of the peak tends to be around the spring market. Now some years the peak happens right around in March, other times it's a bit April or even in May in certain cases. So basically between March and May-ish tends to be the peak. And again, some years over here you see June was very close in 2016 to be close to the May peak. So you might have this little bit of a divergence in terms of when you see the most sales, but they tend to peak in the spring, and then you have the big drop off, and obviously then December and January tend to be the worst 2 months of the year. Now, this year, obviously, when did COVID-19 hit and when did all of the restrictions come in place? Well, early to mid-March, depending on where you were. So because of that, guess what? There was no real March market. The housing market, started ramping up in February, as it always does. It was looking promising. As a matter of fact, you see it was, February was better than both 2017 and 2018, and was also quite a bit higher than the 5 and 10-year average. But then in March, we had this significant decline. Again, it wasn't the worst March yet, because you can see both 2018 and 2019, when it comes to Toronto at least, they were worse because, again, there was a bit of a slowdown in Toronto. But then obviously April numbers were completely abysmal. It was pretty much the slowest April basically in the last 30 years, basically since April 1990. That was the worst spring market. And then May wasn't much better. Both of these were significantly below both the 5 and 10-year averages. And this sort of trend pretty much replicated itself, or kind of repeated itself, in many other Canadian cities. Again, I'm just using Toronto here as an example, but it was very similar in Montreal, Vancouver, etc. Right? And then obviously, as we started kind of relaxing some of these restrictions, so obviously when you don't have a lot of sales, when there aren't many people interested or able, even if they wanted to go out in public and actually view homes, then what tends to happen is, obviously there aren't really any sales, or there are very few sales that do occur. And at the same time, as things become very uncertain, many people were contemplating selling, chose to maybe hang tight and just stay put for a few months until they had a better idea in terms of what was going on in the economy. So as a result, there was very little supply. So there was very little inventory on the market. So when you have very little inventory on the market, combined with this uncertain environment, again, for subsequent months, so basically you have April and May, there were very few listings. And obviously when you have few listings, even if you have a lot of people wanting to buy eventually and they're able to buy, there's just not enough inventory. So as a result, there's significantly fewer sales overall. And as with all things in economics, if you have this kind of unbalanced market where you have an uneven amount of demand and supply, that's when you can see these price fluctuations and changes. Specifically, as the economy was slowly being allowed to restart, as in-person visits were being allowed to occur again, there were significantly more people wanting to buy that were initially wanting to buy in the spring market, that only got around to looking at houses in mid to late June and then July, right? So you have this entire pent-up demand that usually, you see kind of this entire activity that typically happens here over 3 to 4 months. Everything kind of crystallized, and we see it basically mid-June to July. And obviously the July numbers are really the ones that are kind of once the country had reopened to a larger extent, because early June we still had many parts of the country that were still under significant lockdown or shutdowns, and as a result, even though midway through June many of the sectors and industries had started reopening again, the numbers for June were a lot better obviously than the numbers for May, but they weren't exceptional by any means, right? So yes, we've seen pretty much the best July. As a matter of fact, it's 24% higher demand in July than in than in 2019. It was one of the best Julys on record, but that's just because you've been missing 3 to 4 months of top peak market activity. So you have all this pent up demand. And again, the demand came back faster. People wanting to go out for homes, all those people that were planning on visiting homes between, March and June, they only got to do so in late June, early July. And basically the sellers were a lot slower to pick things back up again. So then you all of a sudden had significantly more buyers than sellers. And what happens when you have a lot of buyers and you have very few sellers? It becomes a seller's market, meaning sellers are in control. You can have basically people that start bidding each other and outbidding each other. You have bidding wars, and that's how you push prices higher. Combined with this, you have, again, ridiculously low mortgage rates. Currently, if you have a decent credit score, you can qualify for a 5-year fixed rate of around 1.8% or thereabouts, 1.9, 1.77, 1.78, quite a few of them. And then obviously variable is also just around 1.8 or thereabouts. And you can even lock in a 10-year fixed mortgage around 2.5%, which again, many say that, if you're able to, it's definitely mathematically speaking, it's highly likely that 10 years down the road, interest rates will be significantly higher than they are now. Obviously, for the next 2 to 3 years, interest rates will probably have to stay low as the economy recovers. So long story short, you have the trifecta of initially very, very little demand, very little supply. So prices so initially prices as well for March and April prices and sales were low. But then in May and June, as people started being more interested in potentially starting to do some virtual visits in May and then doing visits in person in June, these days actually there are more and more people just buying without sight unseen, just seeing the pictures online or maybe seeing a virtual tour. That pushed prices higher. So little inventory with increased demand from buyers, but not enough sellers willing to kind of step back into the market just yet. And you add to that the whole, record low interest rates. Basically, cheap money always kind of stimulates the economy. So let's look at slightly more kind of global or not global, but countrywide data. So these are the data that were released last week on August 17th specifically, or I guess technically speaking earlier this week on Monday, I should say, by the Canada Canadian Real Estate Association. Sorry, there we go. So this is what this is where I'm taking my stats from, and I'll kind of highlight some of these more specific graphs and charts. And again, this link is already in the description of the video. It's the first link. So what are some of the main takeaways here? The national home sales, so the number of sales rose by 26% month over month. So the previous chart that I showed you, that was specifically only for the Greater Toronto area, whereas this is literally the entire country. Actual activity was up 30.5%, so that's non-adjusted, because a lot of times they have this seasonal adjustment where basically they're looking at, we've seen this kind of seasonal trend, right, that I was talking about before, where you have this massive peak in the spring, a relatively lower demand in the summer, and a slightly smaller increase in the fall, and then obviously a significant drop in the winter. So they kind of adjust. There's a mathematical way to adjust that. So this is not non-seasonally adjusted. So these are just the real numbers. So we have this increase of activity of 30.5% higher year over year. And this is, again, these are the stats for July. And again, the main reason you see 30.5% more demand this July compared to last July, well, again, number one, in certain cities such as Calgary, such as Toronto, there had been a bit of a dampening of price increases, or at least in the demand of homes, depending on which, if you're looking at condos, if you're looking at single family detached, if you're looking at townhouses, depending on which sub areas, some had increased, some had decreased in price. But overall, there wasn't, there's usually not as much demand in July compared to the booming spring market every year. Obviously this year, because there was no spring market, this is the main reason why we see this massive increase in demand. we have these newly listed properties climbed by only climbed by 7.6% month over month. So people have started relisting more properties as we've gone from June to July. Actual natural average sale prices rose by 14.3%. So this is the average of everything combined, condos, townhouses, and single family detached homes. So obviously condos have not been faring as well, especially condos in the core of large downtown cities, and the tallest condo buildings tend to usually will see a bit of a decrease in demand and potentially also decrease in prices for at least a few months or a couple of years, depending on how long this mess takes to resolve itself. There's a good argument to be made that eventually condo prices and condos in general there will be an increase in demand eventually again. Just no one can tell for certain how long it'll take. As a result, if you want to buy a condo just, as a speculative investment, you probably want to make sure that the money you're investing or locking into that asset is really the best way for you to distribute that money, and it's money that you're fine locking in for at least 5 to 10 years, because it's unlikely that condos will be booming, at least in the high tall downtown core buildings and condo buildings, for at least the next 3 to 5 years. It's probably going to be at best sort of a neutral market, worst case scenario, declining or significantly declining market. Again, these are just guesses, not my own. I'm just quoting here data from various analysts, various economists. These are sort of their best guesses, compared, based on the models that they currently have. And again, this is provided that COVID, we have a vaccine or some form of treatment within the next 6 months to a year, and then things hopefully will resume some form of a pre-pandemic normalcy, but we shall see. All right, so let's very quickly look at some of those graphs and data from the CREA, I should say, the Canadian Real Estate Association. So here you can see they're basically compiling data from the various quarters. You can see that typically, see here in the second quarter, so spring of 2017, you tend to there was a significant increase in demand and supply, and same thing, like there tends to be quite a bit of uptick usually in the spring, or at least that's what it is. Now obviously, spring of this year, well, this is your demand right here, in case you're just curious. Like this is what the demand looked like this year, right? So that's substantially lower than the normal, right? Normally you would have, in those 3 months, you would have roughly, again, this is nationwide, you would have around 780,000 listings, whereas this year was 550,000 listings. And then in July, just looking at the most recent month, so that's your average over there, and then if you're looking at July, here you have, so keep on, this is quarterly, those are quarterly numbers, this is just for July. You can see that this is a very, very high number for a July. And that kind of very much explains this sort of increase in listings, that 7.6% that I just mentioned beforehand. This is the actual number of sales. So same thing here. You see the sales, the average sales per quarter. And obviously this year in the second quarter, because we didn't really have a market, or the market was substantially lower than normal, than usual, you have kind of record low sales, again, nationally. And then obviously July is kind of a record month. But again, to reiterate, the reason you have this is not because all of a sudden people are like, oh my God, real estate is the best investment ever. How was I so dumb not to realize this earlier, right? So that's not the reason why people are investing. Again, nothing against real estate, but just realize that the reason you have this massive spike is because you had no market in the spring. Right? You had no market in the spring. Prices were kind of either declining or flatlining, depending on which areas you're looking at. And then you fewer and fewer people listed. You don't have any listings, or you have significantly fewer listings than usual, combined with cheap money and combined with increased demand from people that really wanted to buy and they weren't able to do so for a few months on end. That's basically the perfect storm for seeing this price increase. Now, A lot of people say, well, this is just a revamped Toronto market, a revamped real estate market across Canada. This will continue ad infinitum. Now, there are a few kind of, if you're looking at the data, you might be wondering, well, how many people are currently on CERB, right? How many people are still receiving the Canadian emergency response benefit? Now, I've covered this last time, or I think 1 or 2 weeks ago. We talked about this on a couple of occasions. So I'm just including the link over here. So these are the latest numbers, right? So this is data up until August 9th, so about 2 weeks ago. And you can see the number of applicants still there. As a matter of fact, I was hoping that they would finish their little press conference a bit earlier. Just before this session started, they were still going on about it. So the new finance minister, CREA, basically has announced some new so you can see this over here. So this was announced today at 3 p.m. So just before today's session, they've announced that they will be extending the CERB, and then there's also 3 new COVID-19 benefits. They're still trying to kind of review how they're going to be dealing with transforming CRB and merging it with various benefits. And now that Bill Monroe has left his, has basically resigned as finance minister. Many people see Miss Chrystia Freeland more as a, she's probably going to be much more on board with larger reforms that Trudeau might have in mind, whereas Bill Monroe was a bit more conservative in his approach in terms of, trying not to rack up too much debt. It's kind of funny when you're talking about not racking up too much debt when you're looking at $350 billion worth of debt, but what have you. So long story short, they've announced these programs, but it's not finalized yet. So if you're interested in this article, you can either Google it or here. I'm going to put it in the chat for you right now. Let me just click the correct. Here you go. This literally just came out as I was setting this up. I'll include the link at the bottom. So the reason I'm bringing this up is not to try to be a downer, but you have to realize that when you have 8.5 million people on some form of unemployment / emergency government benefits, those people don't qualify for a mortgage at the banks, right? So if you don't qualify, if you bought a pre-construction, which we talked about last week, pre-constructions, and right now, let's say it's due in September, if you're still unemployed, if you're still on CERB or whatever CERB will be replaced by within the next few months as they're trying to figure this stuff out, well, then tough luck, right? You have to find a way to either have a larger down payment or have to find a way to finance it one way or another, because you probably won't be eligible for a bank, a CMHC-backed loan at a standard bank, right? So you won't be able to get a regular standard mortgage, and that's an issue. So again, the reason I'm bringing this up is this is the deferral cliff, right? So this is the whole point of those roughly 800,000 Canadian families that haven't been paying their mortgages. They've asked for a deferral. Those deferrals are supposed to end in September. And again, they're slowly announcing the new new updated support programs that will be in place, and extending the CERB for a little bit as they're finalizing the new support programs and social programs, and they're probably going to be announcing something for mortgage deferrals and potentially rent deferrals. We will see. From the various sources that I've read and from what I've heard, basically, by next week, they should have a clearer picture. As a result, next week's session, I'll actually be talking about the new governmental benefits that will be in place. So I'll basically the thing that was supposed to be the presentation I hoped they would have ready for 2 weeks ago when they still didn't have enough data. Hopefully by next week, they'll have enough data. So I'll have a bit of a review and overview of that then. All right. So as I said, overall, for Canada as a whole, we have about 14.3% year-over-year growth. So this is from the CREA. So this is the the Canada-wide data, and then you can obviously look at each individual province. You can see that the provinces that have seen the largest increases year over year, so from July 2019 to July 2020, are Quebec and Ontario respectively. And obviously Quebec, the city that has seen the largest increases in prices, according to the CREA, is obviously Montreal and Quebec, right? So for those of you that are still based in Montreal, you might have noticed this massive spike, and you might be telling yourself, oh my God, real estate, what is going on? Like, how come that real estate is booming when the economy is not doing great? Well, again, I think those, I kind of answered the question in terms of why prices have been increasing. So it's incredibly important that, yes, if you can afford and want to buy a home, and you don't mind locking, whether it's a condo or a house, and you don't mind locking in your money for at least 5 to 10 years, even in normal times, there's typically no point in buying real estate unless you plan on living there for 5 to 10 years anyway, just because of the very high transactional costs associated with it. But especially when you're dealing with a very unknown and potentially volatile environment like we're in right now, it makes even more sense that you only purchase if you're perfectly fine locking in for a few years and you have a relatively steady source of income. You definitely do not want to be buying anything that you will be forced then 3 months down the line, I should say, to resell because you're no longer able to afford the mortgage payments. Okay. Now, again, a bit more data here from the CREA. So specifically here, they're looking at home sales. In black, you see the 10-year monthly moving average of roughly how many homes get sold per year, so per month. So it's roughly 40,000 per month. And then we obviously in March and April, we had this massive drop here where basically there were roughly 17,000, 18,000, 16,000 thereabouts homes sold only in that month. So that's almost half of the normal long-term trend. And obviously you see this kind of yearly fluctuation from year to year that tends to happen. And then obviously because of all that massive pent-up demand, as I mentioned before, then you see this kind of best July on record. But again, it's not because people think that real estate is necessarily worth more now than it was a year ago. It's because of all that pent-up demand, the relatively low inventory, even though there has been a bit of an increase in inventory, and the relatively cheap money available. Right. So all the data that I've shown you so far, Canada-wide data, is from the Canada Revenue Agency, the Canadian Real Estate Association. There we go. The other important report to keep in mind and pay attention to is this one that was released by Teranet this morning. So this is their monthly average report, and sorry, there we go. Let me just, because that's my last little, there we go. Okay. Let me just open that up over here. So this is what it looks like. And again, this is your second link right now in the description of the video. I'm going to copy it one more time in the chat just so you can see it. There you go. So basically, this is the exact same data as what I'm showing you. And this is just a different version of the graph itself. So this is the exact same graph. So this shows you overall increases. Now, the slight strange dichotomy that you might notice here is, according to the CREA, right? This was published, you can see, on August 17th, right? These are for July 2020, and you can see this, 14.3% year-over-year gain that I mentioned to you before, right? I'm showing you this just so you can see that these are the actual numbers. Now, this report was just published literally this morning at, I think, 7 a.m. or 8 a.m., something like that. And this one was basically published and then basically Canada-wide for July of 2020, they've only seen a 5.49% increase. Now, the reason of this discrepancy is there are different ways of looking at these numbers, of calculating these numbers. The CREA reviews some of their numbers periodically. Teranet reviews it at a different pace. So sometimes certain houses that were assumed sold, let's say this month, but then if the transaction doesn't fall through and some of the deals get canceled, then those numbers don't get considered until next time. So then your sales numbers are different. So then when you're comparing those numbers to the previous year numbers, you might see a slight fluctuation in percentages. And then depending on the methodology used, whether they're adjusting for seasonal sales or they're not adjusting seasonally, you will see different percentages. So the reason I want to present you with both of these sets of data is just because 5.49% year-over-year price increases is still significant, right? Historically, real estate has gone up by roughly 3.4% or so year-over-year, right? So this would still be about double as much, but an increase of 5.49% and an increase of 14.3% are very, very different numbers, right? One is almost 3 times as much as the other one, right? So this is kind of where that quote that I mentioned before, the lies, damn lies, and statistics, depending on what stats you're focusing on, depending on which reputable organization you're taking your selective stats from, you can paint a picture as it being a booming market or a market that is recovering at a decent rate but is not necessarily booming quite as much. So again, this is not to be a downer. This is not to be, I'm not trying to say that the CREA is lying or anything like that. They have a slightly different methodology, and Teranet has a slightly different methodology. The point is, it's important to have multiple sources. That way you can make a more informed decision of what's actually happening in the markets themselves. Okay, so let's just look at their main website over here. So let's say we're looking specifically at Montreal. So here, they'll talk about specifically Montreal itself. So you can see that Montreal specifically has seen a increase in price of 9.31%, and the way the Teranet house price index is used, they're basically using 11 different cities. So that's the C11 that you're talking about here. Montreal specifically, and it's adjusted for the size of the city. Montreal, being Canada's second largest metropolitan area, accounts for 14% of that metric, right? So based on those numbers, obviously, if you're giving this 9.31% a 14% weighing in your total number, that will make the end result different. So the CREA uses more than 11 metropolitan areas, and as a result, the numbers will be a bit different as well, and their weights are a bit different as well. Okay, so it's important that you understand, instead of just freaking out or panicking or being really excited when you just see some numbers thrown at you in the media, know where to find the main reports. Understand how the numbers are calculated, and then that will allow you to make a better and more well-informed decision. So let's look at Toronto, for instance. So Toronto has seen a price appreciation according to this website here, and according to their methodology, of 8.06% year over year, only 0.3% month over month, and year to date, so from January of 2020 until now, until July, I guess, of 6.71%, and the weight is 34.6% based on the population, based on the market size of Toronto, Canada-wide. So the 8.06% accounts for 34.6% of the total number or total value. Okay, so I hope that makes sense, and that kind of addresses the question in terms of how these numbers are actually being calculated by these guys here. All right, so let's say, so that's that. So same thing with the CREA numbers. If we're just going back to the main, where's their map? There we go. National price map. So then you have something like this. So here, again, Canada-wide is 14.3. Let's look at Montreal according to their methodology, right? Because you want to really compare apples to apples. So according to them, Montreal is up 14.1%. Now keep in mind, at this point, that 14.1% is literally just Montreal numbers. It's not that Montreal accounts for a different weighing of the total Canada-wide. And let's look at Toronto, since I've been using those two as examples. Where is... Greater Toronto. There we go. So according to them, it's 10.0%. So 10% versus and 14. And again, Montreal is 9.31 versus 8 point something, I believe, for Toronto. In that case here. So important to look at these. So let's we have Montreal there. Let's add also Toronto. Here we go. So Toronto is in purple. Montreal is in green. This is the price in the index, and this is the number of sales, right? So you can see that we've had this decline and relatively low-ish sales. Okay. So prices are up, but again, I've covered the three reasons why they are up. But even the fact that they are up, by how much they are up, it depends based on which data you're looking at. Okay, so it's important to have a better idea of where that data comes from. All right. So what is the wrap up for today? As I said, I'm trying to keep these a bit shorter than I used to, so trying to make them around half an hour instead of an hour plus. So we've seen that house prices have increased substantially in July, right? And the reason I'm comfortable using the word substantially because whether Montreal prices have increased by 9.03% or by 14.1%, those are still substantial numbers. Whether the Canada-wide numbers have increased by 14.3% or by 5.94%, they're still substantially high numbers. Again, whichever number it is, just be aware that the reasons are, so the factors, low mortgage rates, that's probably the most important factor, pent-up demand, there was no spring market, and relatively low inventory, right? Combine all those three. Now, with, as I mentioned before, millions of people, 8.58 million still currently on CERB, with that little extension, which again we'll talk about more next time on next Thursday. You have the potential of having a lot of people that were about to close on a mortgage or were contemplating, considering buying something that might not, or some people that might be forced to actually sell. Now, obviously, the government will do their very, very best to avoid a real estate market crash, and they'll probably, again, implement various other benefits from here on out. Again, they haven't announced them yet, so by next week, hopefully, they'll announce more of them, since August is coming to an end, and a lot of these deferrals pretty much are ending in September of this year. Yes, a question. Great question. So what do I make of the upcoming deferral cliff in the third quarter? Well, again, normally the deferral cliff should be occurring sometime in September, so probably end of September, early October, with literally the just announced kind of update for, so here I'm going to include another one. I'll put both of these links in the description below. So let me just get this over here in the chat. So great question. So this is literally brand new news. It's just literally the announcement was happening as I was starting to set up this presentation. I've only listened to part of it, so I don't know all of the details just yet, but I would highly encourage you to kind of read this. So what I just pasted there is this, what we know so far about CERB to employment insurance transition. So obviously this talks about how people will be able to, afford buying food going forward. So obviously right now they have announced that it will, the benefit here. So this data was only updated at 2:10 p.m. today. And then this more recent article that was posted at 3:06. And I'm sure in the meantime, there have been other articles that have been posted since I've been talking here. And I'm going to include that link also in the description. Here it is again for those of you that might have joined us a bit later. So there are these three new benefits, which again, they are literally just announced today. I'm still waiting to see, to hear a bit more information about that. But yeah, they will have to do something about the deferral cliff, because you have literally between 750 to 800,000 families in Canada that have not been paying their mortgages. You have thousands upon thousands of people that have not been paying their rents. Some because they cannot afford it, and that's the whole point of the program, and some because they figure, well, if I legally don't have to and no one can kick me out, might as well just defer and use my money otherwise, right? So that is a massive, massive, massive issue, and with the new finance minister, so Krista announcing earlier that yeah, she will definitely be on board to enable and enact some significant social reforms. Again, it's anyone's guess right now, other than what they've announced already today. But yeah, more announcement will follow within the next week. Again, according to my sources, according to the various reports I've been reading, by next Wednesday, they should more or less have finalized this. But obviously, depending on, and since Parliament has been prorogued right now, there shouldn't be any delays due to any form of debate in Parliament. Whether that's a good or a bad thing for democracy, I will leave it up to your own decisions here, or to your own opinions, I mean. But yes. So again, by next Thursday, and that will be next Thursday's sort of topic, I'll come up with a few summary slides to explain how this is going to look like, and how this is going to work, and how people can best kind of plan accordingly. If you're looking at Minister Krista Freeland's sort of history, if you will, or her recent actions and also recent publications. She has a few books that have been out. I haven't read them. I've just seen some of the summaries. I haven't gotten around to actually reading her most recent one, but I've basically, from the summaries that I've read, she tends to be of the opinion that yes, it's government's role to enact very large social programs to better society, and obviously this is the perfect excuse to enact large government programs. So chances are there will be something a lot larger than the current 350 billion deficit already at play, which is a bit it's quite scary for someone like myself, that I'm usually trying to make sure that I'm not, that I'm staying within my budget and whatnot. So again, I'm not trying to say that we're going to be going to be seeing like a $400 billion deficit for the next 5 years every year. Hopefully not. But there's a good chance that some form of universal basic income is pretty much unavoidable at this point in time, and how that will impact the deferral cliff. So hopefully by next Wednesday we'll know the answer, and I'll cover that by Thursday. So another question here. So do I think the loan loss reserves by the big banks will be eaten into quickly or slowly, if at all? Now, so that's a great question. So the big banks have set aside about 100. So they have about a 10 to 20 billion dollars. I've seen different numbers thrown around. So there's roughly 120 billion dollars worth of mortgages of loans that are currently not being serviced. And so yeah, that's a very fair point, right? So housing, there's this weird dichotomy between what is perceived as risky and what is perceived as not risky. So there are valid arguments to be made saying that large downtown condos, at least for the next few months or maybe next couple of years, will see a significant decline in demand, especially because it's not just people that, oh my God, I don't want to, I'm afraid to live in a condo because I might catch COVID from somebody else. It might be literally people saying that, I bought this as an investment condo and I wanted to Airbnb it out, right? A lot of condo boards in recent months have literally outlawed Airbnb. That was already the case previously, where you basically, a lot of condo boards in the, in your bylaws for the condo, you would have literally, you wouldn't be allowed to have to grow any weed, for instance, and that's mostly because it typically requires high humidity and heat, and they're worried that you're going to be kind of creating a mold-prone environment, and that might spread to your fellow residents in an adjoining condo unit. So despite the fact that it's legal in Canada to grow your own weed plants, a lot of condo boards had already instilled in their bylaws that you're not allowed to grow it on their premises. So no one can arrest you for it, but because it's part of that, you could get a fine basically from the condo association if you're not respecting it. And quite a few of them, same thing, for security concerns, they would typically not allow for short-term rentals via websites such as Airbnb. Now, these days, with the fear of COVID-19, whether it's overblown or not, depending on who you're asking, depending on the circumstances, depending on how big the elevators are, et cetera, et cetera, et cetera, a lot more condo associations literally do not want and have made Airbnb-ing out or short-term rentals illegal on the premises. And obviously, if someone had bought multiple condos or even just one condo as an investment condo for Airbnb it out short-term, those people will have to relist or find long-term tenants. And in many cases, Airbnb-ing it is a lot more profitable than a long-term tenant, right? Because you can easily charge, if you're downtown Toronto or downtown Montreal, you can easily charge, $80, $100, $200 a night, depending on how nice and how big your condo is. You can't really charge that same amount per night if it's a month-long or year-long rental where you're paying monthly fees for just an average size condo. Obviously, there are condos, luxury condos that easily rent for $5,000, $10,000 a month, but that's a different category altogether. So long story short, a lot of demand for condos that used to be for short-term rentals, at least for the next few months, couple of years, you might see a significant decline in that. As a result, there's a reasonable argument to be made that there will be a flood or at least a significant increase of number of condos on the market, which that might dampen or decrease condo price, or at least high-rise condo buildings in downtown core, as people are flocking more and more to the suburbs. Will this be a permanent thing? All depends to what extent COVID-19 and whatever remains of it in future flu seasons as the years progress, how that will have changed our society, how that will have changed our work ethic, whether all companies that can operate remotely will choose to allow employees to opt whether they want to work 100% remotely or not, and so on and so forth. So all those kind of questions are up in the air. But I think eventually those condos will be repurposed for something else. Worst case scenario, what exactly, no one knows for certain. So if you want to buy an investment condo, be ready to be locked in for at least 5 to 10 years, which again, even under normal circumstances, that's sort of something that you would want to do anyway. But it's not don't buy, it's just be aware that despite the fact that we've seen these massive price increases, as I've detailed it earlier, number one, don't fall victim for oh my God, it's gone up by 14% year over year in July, so that means it's going to go up by like 30% next month. No. Just relax. There's a good chance as the deferral cliff, one version or another of it will come about, especially for condos. You might see price. I'm not forecasting like a massive, crash, but you cannot have these massive increases every single month when millions of people are still unemployed. Will we have some form of universal basic income? Possibly. Again, the next 7 days are going to be really interesting. I'm just waiting to see their updates. Hopefully, within next week they should update this. So for detached, do I see a volume for government intervention outweighing the headwinds from public debt? That's a great question. So honestly, it will depend, right? Because Trudeau has mentioned on a few occasions when people have asked him, including yesterday, I believe, when they were when they're right after the new finance minister was appointed, he was asked, well, how are you going to be paying for all these new reforms that you had in mind? And that clearly now the underlying kind of the subtext was that Krista will be probably more likely to want to have sweeping social reforms, whereas Bill was a bit more conservative with overspending, which again, describing Bill Monroe as someone who's conservative when you have a $350 billion deficit. If $350 billion in deficit in a single year is conservative, I'm kind of really afraid of what happens when someone that is less conservative with the money is in charge. But again, we will see. This is all speculation. It's just that, so his point was that yes, eventually we will have to raise taxes, but we cannot raise taxes, or at least we cannot raise taxes substantially right away, because that will have a significant net negative on the economy. So we will have to pay for all of this debt somehow. How long it'll take us, and how effective we will be at addressing it is sort of a question for time to, and kind of time will tell. But yes, taxes, including municipal taxes, school taxes. I mean, all the schools, for instance, right now, when they're reopening up, they have to, in many cases, right, they have to rethink of, how to divide up the classroom. They have to work with reduced number of students. You also have to have some, depending on which province you're in, they're offering in many provinces, most provinces, as a matter of fact, I think, they also offer the option for parents that are very uneasy, either because they're really worried about it or because they have some legitimate health concerns for themselves, and they're in a high risk category, to allow their students to be only 100% remote and being remote from and basically do it the entire year remotely, whether in high school or in grade school, etc. If you're in a more underprivileged environment and you don't have access to a computer, many school boards offer free rentals, or basically they literally will loan you out a Chromebook or various other computer tablets, pay even or contribute, pay for a internet hotspot, or at least pay part of your internet bill so you can get a kind of upgrade your internet to something faster if you're not able to afford the faster ones, etc., etc., etc. So all of those social programs, those are on top of, well, I also need food, I need money via CERB or something else to pay for, food, and I need money to pay for rent or for my mortgage. So someone will have to pay back that money in one way or another, and taxes are going to increase at some point or another. So how will this impact the volume of detached houses? Well, obviously, if you're looking specifically at detached homes, we've seen a massive increase in demand for detached homes because, again, a lot of people, for good or bad reasons, are more uncomfortable. When I say bad reasons, I'm saying, some people are overly cautious and others have legitimate health concerns. And even people who are very young, keep in mind, I've said this before, but I'll say it again in case you haven't been here for previous sessions. COVID-19, as far as we understand it currently, is a coronavirus, so it's a respiratory virus. But the impact it has on the body, it acts much more as basically a vascular disease, right? So it'll really so it acts much more like a vasculatory disease, in a sense of, yes, your lungs are primarily impacted. But why are your lungs primarily impacted? Because the very small alveoli and like the very tiny blood vessels that you have in your lungs, that's basically where COVID does wreaks havoc. And that's also why you're seeing COVID toes, where you basically all your capillaries, all your small blood vessels tend to be, or areas that have small blood vessels tend to have issues. There are people, young and old, reporting in certain cases small brain clots or other sort of form of arterial clots. People that are either overweight or suffer from some form of cardiovascular disease are a much higher risk of developing complications, etc., etc., etc. So it spreads as a respiratory disease, but it acts much more as a vascular disease. So because of this, one of the main dangers of it is it might impact you or infect you, and we don't know this yet, but worst case scenario, it could infect you to the point where initially you're not really, you're young, you're healthy, you might not necessarily see any significant negative consequences initially, but it might be dormant, or it might have small, it might produce some small scar tissue, what have you, that later on, if you catch it again, you might be overly sensitized. Again, these are just hypotheses, these are just estimates and just best guesses, but that's a legitimate potential risk, right, of the virus. So because of that, and especially if you already have asthma or are overweight or are in a higher risk category, I understand why some people definitely don't want to be living in a condo anymore right now, or at least for the time being, right? So this obviously will increase demand for for single-family detached homes. And a lot of people, the largest the increases in demand have actually been more on the outskirts of cities. So not in the middle of nowhere, but literally in the suburbs. Why? Because then you're still not that far away from the city. So then if you have to, go into work eventually once or twice a week in person, sure, you'll have a longer commute, but driving for an hour each way for once a week, that's a lot easier to do than driving for 45 minutes every single day of the week, right? And then obviously if you're buying something on the South Shore of Montreal or North Shore, or if you're buying something in Burlington or in like if you're looking at Toronto, for instance, or Ajax, it's a lot cheaper than buying something closer to the downtown core and finding a much smaller single family detached house for $500,000 more than the equivalent, right? So yes, single family detached homes, whether they're in the core or outside, will see a premium, and chances are there will be significantly higher demand for it. To what extent that will impact short and long term markets will really be up in the air, because again, no one really knows how quickly or slowly this entire mess will sort of last, basically. And so one final word here on the deferral cliff. So expect the supply to increase, especially of condos and especially of downtown condos, at least temporarily. Then this typically, when you have increased prices, the same way that when you have increased supply, you typically have a flattening or a decrease in prices, the same way that we've seen recently, and basically from March till June, that we've seen a drop in supply. Basically, people just stopped selling because they didn't know what was going on, but an increase in demand. That's when you see an increase in prices. So we might actually see kind of the flip of July come October or thereabouts. All depends on what the government will have in stock, what the CMHC will try to negotiate with the banks in terms of those $120 billion worth of mortgages that are not being serviced right now, how stringent they will be allowing people to extend that deferral, to what extent, who will be allowed to defer, et cetera, et cetera, et cetera. All those things are still question marks. And again, hopefully within the next week or so, we will find out at least a bit more from the government about the various social programs that they plan on implementing. Obviously, the budget should still be due in October. Bill Monroe had set it for early October. Krista Freeland, as far as I know, should still be in line for delivering the 2020-2021 budget in October. Obviously, normally should have been delivered in March or April as usual. So that's pretty much it for today. So I ended up going for a full hour in the end. Some great questions, by the way. So I hope that was useful for all of you. And I hope, again, by providing you with links both to the CREA website and the Teranet website, you can kind of have going forward, have a better source of basically the raw data and where these reports are coming from, instead of kind of falling in the trap of some columnists. Again, depending on what data you want to highlight, you can both kind of paint it as, it's a grim picture for real estate in Canada because look, the number of sales is very, very low, or you can very much highlight we've seen the best July on record. Yeah, we've seen the best July on record, but there was no spring market, right? So it's important to put things in perspective and make informed decisions. And yes, and you're very welcome. So yeah, thanks again for all your comments. And yeah, if you have any other questions, just leave them down in the comments below. And I'll see you all, I guess, perhaps, or next week or in a future video. So thanks again, and have a great day, everybody.